Welcome back to Mostly Growth, the number one podcast in product monetization. And joining us today is the one and only Tyler Denk, co-founder and CEO of beehiiv, the newsletter platform built for growth. CJ and I are both beehiiv users. I think we're in it probably too many hours a day. CJ is now in the MCP, so asking questions about beehiiv to Claude. We don't want to turn this into too much of a product feedback interview, so we'll try to avoid that, but we might have to bring in a few requests as we go.
Yeah, I'm here to take the feedback. CJ, also, how you liking the MCP?
I got access last night. I spent my whole morning going through and dissecting where leads are coming from and then figuring out where churn is coming from. And, I'm a CFO by nature. So then I'm doing the LTV to CAC. I'm doing my payback period on when I break even on these and trying to figure out which channels to funnel the next dollar into, because I had never done any sort of paid acquisition before and I've been messing around with it. And it's funny how all the numbers were in beehiiv, but this just makes it more accessible. And we joke on the pod about how everything's turning into a prompt bar now. It's actually pretty cool to be able to say, make me a table of this versus that. So it's been a bit of a revelation.
Yeah, well, I'm a huge fan of the MCP. I probably use it daily, but it's kind of like the first time you have AI do something for you, like the eye-opening moment that everyone gets their first time using Claude or ChatGPT. And for anyone who's operated a newsletter, to just have all of these questions that you've always wanted answered done for you and presented in a beautiful chart and graph with explanations and data, it's pretty amazing.
That was the thing. I knew what I wanted to ask, but I didn't know how to get there. And this cut out that middleman that would have been 17 different exports. And then I think I'm sure about it. It actually got me to what I envisioned.
And me as the person who runs product makes my job so much easier, because we used to just get so many requests from people being like, can you build all of these different dashboards so I can gather these insights? And now it's just download the MCP and ask Claude, and it'll give you all of those insights in 2 minutes. So we actually have to do less product work.
Wait, I have to unpack this. You're north of 2 million MRR, and you still run product for the business?
I also have 14 direct reports. So if I had to say what is my superpower as a founder and CEO, it's that I've delegated things for sure, but I have not added that many layers of abstraction between me and the others in the business. I write product requirement documents. I'm working with designers on mockups. Product's what I enjoy doing the most. And so I spend a lot of time working with product designers, engineers, everyone.
Are you using anything to be more productive? What does your tech stack look like?
Probably pretty similar to a lot of people's. For a lot of things, I go through Claude. Linear is what we use for project and product management. I think it used to be used a lot for PMs and designers and engineers primarily. But now that Linear has launched this MCP, I think everyone on the support team also has access to using Linear via MCP, just to be did this ticket ever ship and what impact does it have? We have a few other cool integrations with Claude. So there's something called Unblocked that you can add to your Slack. And it basically just gathers context of what conversations are happening in Slack. It's connected to your GitHub, so it understands our code. It's connected to Linear, so it knows what engineers are building what. And it's connected to Unblocked, so it knows what conversations are happening in Slack. It kind of understands a full 360 of your business. So if anything ever goes awry or there's a lot of support tickets, you can kind of just ask Claude what's going on, and it can pick up oh, in this one channel that you don't even have access to, Unblocked had access to it and picked up context, which we then created this ticket, which this engineer is now working on, and we think it'll be live end of day today. And there's just so much transparency through the business by connecting all of these different applications through Claude. It's been a really exciting time to build.
So you've been posting screenshots of revenue each month. You and your COO, you've been laying these thirst traps. I think you even shared your burn rate and how much cash you have on hand. What inspired you to build in public in that way?
One is there's the altruistic reason, which is there's so many amazing companies being built and there's so little transparency into how they're actually being built behind the scenes, how they're building product, how they are prioritizing hiring, what their strategy is, what their burn is, what their revenue milestones are. And I feel it would better the entire startup ecosystem if there was more transparency and understanding of what these founders are actually doing. I think what most successful founders do is they think they have the secret sauce. They don't share it with others. And it's only after they are post-acquisition. And then it's kind of them talking about the past of what worked 3 to 4 years ago. Especially with AI, that's why getting advice from it's exited startup founders from 3 years ago is a totally different ballgame today. They never even had Claude code to build or augment any of their stuff with AI. Even getting advice from pre-January of this year before the latest model improvements, it's a totally different business landscape. I just think it would always be so much more helpful, and me selfishly would benefit so much if there was more transparency into what other founders are doing, not after they sold their company and it's all like revisionist history, but actually while they're in the thick of things. So that's like the altruistic version of like, I want to be that type of founder that I wish I had to look up to and be able to share the different milestones and metrics. And then the more selfish version is like, there's a market for that. And the same reason why you enjoy it. Like if I only created content about newsletters, I would have 10,000 loyal followers who just loved email and newsletters, which would be great for our business, but a very limited TAM. But if I can create content about our revenue and our hiring strategy and our fundraising strategy and how I write product requirement documents and build out our roadmap and everything else, the aperture of people that actually care about my content is any founder, any entrepreneur across any industry. And so the TAM is just much larger there. And so I have more of a following and more influence to be able to build an audience essentially.
We should tell listeners your most recent update was 2.285 million MRR, so quickly approaching 30 million ARR. And I do want to talk about your growth strategy, but before doing that, you seem to be thinking about selling the company as recently as last year. Like, could you tell us more about that?
I'll go on record and say we weren't like necessarily thinking about selling the company. What happened was I don't sit on this side of the world, on the banker side of the world, but something must have gone out and 4 to 5 companies came to us inbound all within the span of like maybe a month. Very large companies that had taken an interest in us. And I didn't think we were ready to sell the business. I think we are truly like day one of what I have in plan for like what we can build and what I think the vision of this platform can be and how many people we can serve. So like we're by no means looking for the exit. And as I wrote in my last newsletter, like I think me and our team are the best people to shepherd this vision and continue building. So like genuinely do believe all of that. But when a few trillion-dollar companies come kicking, I feel like you kind of like have to kick the tires and just see like, the market is super irrational. And it was at the time in like Q3 and Q4 of last year. Who am I to ignore inbound from 5 different companies? And like, who knows, maybe there's actually a synergy there where it makes perfect sense to join a larger company that already has hundreds of millions of customers. We de-risk the business. Everyone from shareholders to employees to founders are like very happy. Employees have a more stable, profitable workplace. And we can actually accelerate our roadmap and get like a nice payday. Like it'd be naive, I think, to receive that type of interest and just ignore it. So I think that's the stage we were in. It was the first time that we had serious M&A interest. And as a founder, like I think it's my fiduciary duty to at least see and hear them out and see what that looked like. All in all, like very happy I went through with the experience. I think that's like one of those things that more experienced founders, like once you've sold your business once or twice, you probably understand the reps and what it takes to be able to do that.
And it seems like that was kind of a wake-up call to reset the business and maybe like go after a bigger ambition. Like, could you talk about some of the things that you did, like once you kind of said, hey, we're not going to get distracted by these, inbound offers. We're going to go for it. Like, what were the things you did from there?
Same thing is true with fundraising, right? Like your plan can never really be to be dependent on fundraising for the most part. Like you need to build a successful business that can stand alone on itself. The same way that I don't think we're ever dependent and assuming that we're going to get acquired. Like we want to build the best standalone profitable business where we can continue building. So like we never put our eggs in the basket assuming like we need to do M&A. And so we were already kind of like laying the foundation for what we think is like day one of a very long journey to continue building this platform. Back up 3 years, like we were the newsletter platform. Me and my 2 co-founders came from Morning Brew. I was the second employee at Morning Brew. It was an amazing experience. We built it from 100,000 readers to 3.5 million, got acquired for 75 million by Business Insider, learned a lot and became kind of like subject matter experts of what it takes to build a successful newsletter. And so we kind of entered this space with like a very narrow focus of we want to be the best newsletter platform and we can do that better than anyone else. Substack was 4 years before us and they kind of normalized like the simplicity of having a website and your newsletter coupled together, which we saw at Morning Brew as well. And that kind of became table stakes. So we launched with a very rudimentary website builder. I'd call it more of like a template or like a web page just to hold your content, not much of a website builder. But whenever we launched features about the website builder, we would get more excitement from our users on social. Clearly, like the signal was like, we want to be able to customize and build a website that we're proud of, which led us to acquiring Typedream, which was a YC company that was a website builder, essentially. They compete with Squarespace and Wix and Framer. And that was our first like thesis of, I actually think consolidation in this space is what our users want. They don't want to manage their newsletter on one platform, their website on another, their subscriptions on a third, their digital products on a fourth, their referral program on a fifth, their podcast on a sixth. And you can kind of go down the line of like, what is like the modern tech stack for these content creators and media businesses today? All of them have these incumbents who are either post-acquisition or just like not as hungry as we are, and it shows in their product. So even if it's just a company that focuses on nothing but podcasts, I think that podcast platform is maybe like a 6 out of 10. And I think what we do really well, and like I like to take some credit for this, and like we have amazing engineers as well, but like our product excellence, I really think is like a 9 out of 10 and what we can accomplish in any one of those verticals. We did this big winter release event. It was like a live streamed event. We had like 10,000 people there. And I think it was more of like a branding and marketing moment for us to say we're not just a newsletter company, but we are the platform that any content creator or media business should go to build their business on top of. Because unlike other players in the space, we don't have a predatory take rate business model. We aren't trying to get in between us, them, and their audience and like intermediate ourselves and our brand. We just want to be the tools and infrastructure to help other people succeed on our platform. And I think that's a much, much bigger opportunity than where we initially started. And truthfully, if we were to get acquired last year, that would have been selling us short of what I think we can build with this thesis over the next 3 to 4 years.
Hey, thanks for listening. We'll be right back after a word from our sponsors.
I've been writing my newsletter, Growth Unhinged, for exactly 5 years. When I went all in on it last year, I quickly decided it was time to make the switch to beehiiv. Honestly, I wish I'd done it even sooner. Switching to beehiiv was seamless, but the difference is real. Excellent deliverability, more customization with their AI website builder, built-in automations, and no 10% tax on my revenue. As a data nerd, I especially love beehiiv's dashboards and built-in surveys. My open rates jumped from 35% to nearly 50% after switching to beehiiv, and I'm not looking back. Beehiiv is built for people who actually take newsletters seriously. If you care about owning your audience, it's a no-brainer. Try beehiiv for free by going to beehiiv.com/Kyle. That's beehiiv.com/KYLE. Use code Kyle30 for 30% off your first 3 months.
Ali and the team at Tabs are building something that directly addresses one of the biggest headaches I see finance teams deal with today. Pulling data from your ERP, your CRM, your FP&A tools, and your usage systems and actually making it all work together. If you're running usage-based pricing or complex contracts, you already know how this usually plays out. Contracts live in one system, usage data lives somewhere else, billing happens in another tool. RevRec gets layered on top at month end, and finance ends up just reconciling everything by hand to close the books. This is exactly the problem Tabs was built to solve. Tabs is an AI-native revenue platform built for controllers and CFOs. It brings together data from your ERP, CRM, and real product usage into a single system of record. From there, it automates billing, collections, and revenue recognition without finance having to duct tape workflows together every month. If usage-based revenue is core to your business, this is the future of how billing and RevRec get done. Go check them out at tabs.com/run. That's tabs.com/run.
When I looked to set up my first CRM at Growth Unhinged, I knew I wanted something that was actually AI first. The world has evolved. Most CRMs are still stuck in the 90s. I found Lightfield, the CRM that remembers everything and does the work for you. It joins all my sales calls, reads my emails, and has the full context on every account. At this point, Lightfield knows my deals better than I do. I haven't had to set up a single CRM dashboard. Instead, I simply ask Lightfield questions like, which deals in my pipeline are most likely to close, or who do I need to follow up with today? It even automatically prepares me for meetings with a personalized daily briefing, and setup was quick and surprisingly painless. Lightfield is my sales coach, RevOps analyst, therapist, EA, all in one. See Lightfield for yourself with a 14-day free trial. Connecting data from your inbox takes just 5 minutes, and you can migrate in under an hour. Go to lightfield.app, that's lightfield.app, and use code MOSTLYGROWTH to get 3 months free.
Tyler, you sell to multiple audiences, including individual creators, brands, even actual legacy media companies. I think the Washington Post is now on there. How does growth and onboarding work differently for these audiences?
I was at this event yesterday and we had like a growth marketer talking to me about like ICP. And like ICP is our Achilles heel. And I'd actually love to like go deep with that with you guys. Our ICP is very wide and it makes it very hard to do paid acquisition at scale. We have like independent journalists who are leaving legacy media and going independent. We have hobbyists. We have like upstart media companies, which I consider Kyle and you guys as kind of like this like new age, like more lean media company. We have legacy media companies, which is kind of like Time, Newsweek, The Washington Post, etc. And then we just have like content creators, Colin Samir, Cody Sanchez, all very distinct profiles, all very different needs. And as we go for more of that consolidation play, there's more you can do on the platform and more value we could be leading with, which is also a different onboarding experience for each of them. I think it's the hardest part of the business that we're building is how do we build these different catered experiences? The more legacy media end, it's a lot of like traditional outbound sales. So we have like a 5-person enterprise sales team. They are doing the outbound calls, emails, hosting events, etc., to like build those relationships because those are like very large accounts. It was 100% PLG, 0% enterprise. Just as like a startup, it's easier to get the long tail than like trusted legacy media companies. Now we're about 70-30 PLG to enterprise. So enterprise makes up about 30% of our revenue just due to like the size of those deals and like the momentum in that business unit. I think it'll probably be 50-50 by the end of the year.
The ICP question is tough in the space, but it does feel like whether it's at a business or in the creator economy, this idea of like creator-led brands or like creator-led media is kind of just becoming a thing across multiple audiences. Even if the ICP looks a little different like across industries, the trend or like the thing people are trying to do is at least pretty consistent.
Yeah, I think that's probably the way to view it, right? It's like jobs to be done, not who is the one doing the job, essentially. Because whether it's the Washington Post or you, Kyle, writing the newsletter, like the job to be done is more or less the same. The people doing it might be different and be a part of an organization that looks slightly different. But it starts to get a bit more complicated. Like we launched podcast hosting 2 weeks ago. It's been a smashing success thus far. Like we crushed our Q2 milestone of what we expected in terms of adoption in the first 6 hours of launching it. And so is there a world in the next year where podcast is almost as big as a business as newsletters for us? I think that's like a real possibility. So how do you build different onboarding experiences and totally just like top-down funnels where the ad creative or the content being created leads to a specific landing page, which leads to a specific offer that is specific to either podcast or newsletter? Because it's not always the correct assumption that they're going to be bundled. Like we might eventually acquire users who are just looking for a place to host their podcast and have a landing page to have that podcast live on, and vice versa. Like historically, it's been the opposite. It's just people that have newsletters. The holy grail for us, there's an equation on our end where if you're hosting your newsletter on our platform and all of your automations are set up on our platform and you have your podcast and your website and you're using the MCP, like there's a threshold there where there isn't really an alternative in the market. And the stickiness of a product where we own 4 to 5 product areas for someone, churn gets down to like close to 0% type churn. And so that's also like on the product adoption side of things, something that like we're pushing pretty hard for.
That's the business equation that I was trying to tease out there, because if you're multi-product, your retention is going to be a lot stronger. Your share of wallet share is going to be bigger. How do you also fight the urge to try to be everything to everyone? Because we've seen other companies who are like, you know what, we're going to do all 10 of these things. And you're like, yeah, but I really just wanted that one kick-ass thing that you do. And these other things are like, they're like a 70%, 80%.
It's the classic bundling and unbundling that everyone talks about, right? Goes back to the ICP question, which I still can't answer perfectly. But if we are able to attract the right ICP, we'll just use Kyle as someone who clearly isn't our ICP. Like, whether we launch newsletters and podcasts and digital products and website and MCP, like that should all serve Kyle really well and they should be additive. I think the thesis is when you try to be everything to everyone, you end up just doing everything a 4 out of 10. And the bet that I am making in myself and our team is that I really do think our core competence is product excellence. And I do think that we can actually achieve like an 8 out of 10, 9 out of 10 across the board on all of these different features, where it's not like I like beehiiv for XYZ, but podcasting sucks. So I need to go look for a podcasting platform separately. I do think we can actually achieve like an 8 or 9 out of 10 across all of these. And if I don't think we can achieve it, I don't think we'd go into that product area.
It must be really fun to sit back and forecast what the subscription revenue mix is going to be versus the ad revenue mix. You have like 2 of these engines that can both thrive.
We don't do the ad network enough justice. Like that's one of the hardest parts of the business. I always kind of joke like beehiiv is like one of the most difficult businesses I think we could have imagined to build because there's so many constituent parts of it. And like if the ad network just flails, you'll see that in churn on the SaaS business because a lot of users come in with the hope that they are going to be able to monetize their content with consistent ads through the ad network. And if the ad network doesn't perform, then it just gives them a reason, like a misalignment of expectations where they end up churning. So like there's been spurts where the ad network, whether we didn't forecast correctly, we didn't have the right ad sales, we had a bad quarter, we didn't have enough deals or campaigns live, where like that very clearly corresponds to a spike in churn, with the reason being cost or complaining about the ad network very directly. So we have a two-sided marketplace. We obviously have all the publishers and content creators on our core platform. And we also serve advertisers. So we have Nike, Netflix, Roku, AG1, HubSpot, a lot of big brands. And to them, we are basically another Google or Meta is really what our North Star is. Like the most ambitious slide I ever created on our Steed deck before we had even any product or user. I was like, I actually want to compete with Google and Meta for ad dollars. I want AG1 and Roku to say, we need to hit, X thousand new customers this quarter. And our ad budget looks like X% to Google, X% to Meta. And we know that email is an amazing channel for us. And we know that we can reach very engaged, targeted audiences in email. And beehiiv by far is the best platform to do that. We build advertiser tools. We have an advertiser API. We have an advertiser pixel. So we can see conversions down funnel that happens on our advertiser's website. So we're actually building like true ad tech as well. And that going well helps the SaaS business tremendously because we can say, hey, Nike has this massive campaign. Everyone who's on another platform, call it Substack or MailChimp, who's not monetizing with ads, is like, oh, I have a wellness newsletter. I'd love to have Nike sponsor my newsletter. beehiiv offers that. I move over. That boosts our SaaS business. And then we obviously make like a 15 to 20% take rate on ads through the ad network.
When I started my newsletter, it was, more than 5 years ago at this point. It was free for a while, but the model seemed to be everyone was following a Lenny Rachitsky, which is we're going to monetize through subscriptions. And it worked really well for Lenny. I think it's still working well for him. Like it worked well for a number of people afterwards, but you hit a ceiling. It's like a high churn business, relatively low average price per user. And I think people don't want to have like dozens and dozens of newsletter subscriptions out there. So like the bar is pretty high to be on that list. I've had to get comfortable, and I think you share my sentiment. Like the ad plus subscription model is really going to be the sweet spot for any newsletter in B2B. And like ads are really the main driver of revenue. And Substack like doesn't believe in ads at all. And so they're cutting off like what would be probably 80% of the revenue for like a typical newsletter, at least in these categories.
And that was a big driver in me moving over. And then I remember being at a park with my kids trying to convince you, Kyle, like last steps to get you to come over. I'm like, dude, just come to grips with the fact that you're an ad-based business. Like it's B2B ads. You're never going to be able to make up that much in subscriptions. Like with somebody putting it down on their personal credit card, like you want the juicy VC-backed budgets of a marketing department, not some guy who like makes good money, but has to put it growth unhinged down on his credit card. And like, Substack was great for me getting started, but to a hammer, everything looks like a nail. And I didn't want to sledgehammer my list without segmentation every time to try to get a subscription. Because like my business today is plus 95% ad driven across newsletters and podcasts. And so if I want to get to what I think the full potential is, I have to respect the monetization model that I have to optimize for.
And we still have a long way to go on the ad network front. Like we are still early in building the ad tech and getting the right advertising partners. And like targeting, we're still like day one targeting. Like there's so much sophistication. We've doubled the size of our ML team on the ad network side. And there's still a lot more to build. And targeting like, oh, CJ is a consumer who reads these 15 newsletters. He always clicks on links about like finance and strategy and growth. He lives in the Northeast. He likes these sports teams. Like, that's like the type of data that Meta has on you because they see everything you scroll and click on and like and DM. And like, I don't think we're ever going to get to the sophistication of like Meta's ad platform. But like right now, email as a broad category is so dumb. And we have so much data kind of sitting in this like God mode of all of these newsletters on the platform and all of the readers who subscribe to multiple different newsletters. We know what everyone has clicked on, every ad that they've ever clicked on. We know everything that they've ever purchased down funnel from an ad through our ad pixel. So like, there's a lot of data there to get much, much better with ads. We're never going to replace Google and Meta. Like they're going to be there indefinitely, and Amazon and all of these other players. But I do think we can go from 0% of their marketing spend to 5 to 10% of their marketing spend over the next few years. My thesis was always that the ad network revenue would one day surpass the SaaS revenue, just because like the zero marginal cost of running ads on the platform. So Kyle might pay us monthly, $150 a month for his SaaS fee. But if Kyle were to run ads on beehiiv, 5 days a week, then we're making that 20% margin, 20 times a month. And depending on how large Kyle's newsletter is, we might be making $5,000 off of Kyle's newsletter, which means he's making $100,000 in revenue, which is amazing for him. But that's why my thesis has always been that the ad network actually might be the bulk of our revenue. It's not today. I think we're 60-40 right now, SaaS to revenue on the ad network.
I think CJ and I both use the boost feature within beehiiv as a way to attract subscribers that are interested in what we're writing about. And it's a pretty high ROI channel from my experience, and just also very targeted and being able to work with very relevant newsletters and attract subscribers that want to read newsletters. And so there's very few other places I could put paid dollars to work like that.
Boost, I think, is if you use it correctly and dive in, is like an amazing acquisition channel. It's also the most convoluted, complex part of the app. You send an application, you wait for an application. Like you have to look at their data, look at their location, what's their engagement look like, and then there's budgeting and budgeting constraints. We're simplifying that right now. We're going to release something like a month or two to make Boost much, much simpler. But I agree. If you are in the business as a newsletter to acquire new subscribers, it's one of the best channels. It came from my days at Morning Brew, where we realized the very obvious insight that the best newsletter subscribers come from other newsletters, because if they're already in email, opening other people's email, the odds that they will also like your email, especially if you think your email is better than their email, is very high. So yeah, the thesis is really strong. We just need to simplify the workflow there.
Tyler, you're in the business of empowering other people to build businesses. And we're now seeing this wave where big tech companies are gobbling up what we thought were creator-led businesses. So TBPN just got bought by OpenAI. We saw Starter Story get bought by HubSpot. We saw This Week in FinTech got bought by Plaid. What's your take on this current M&A environment within the creator economy?
I think it's amazing for a lot of reasons. I think it gives a lot of these content creators potentially a path towards an exit that's life-changing for them. Selfishly for us, I think the more excitement there is around not the lottery ticket, but the chance that you can build something of value that can eventually turn into an exit or a great outsized outcome, that's great for more people wanting to step into the arena and start building content and creating content. And I think AI is a big catalyst for this. In a world where so many people are shifting towards AI, the companies that really stand out are the ones that have this authentic layer of trust and credibility. And I think in able to break through the noise, you have to have some sort of content and media strategy to get in front of your target audience. I always use the Hustle example with HubSpot, which I thought was one of the most brilliant acquisitions. But the Hustle was a competitive newsletter to Morning Brew. It was the West Coast Silicon Valley version of Morning Brew that had all of these founders and startup employees reading about tech news, essentially. HubSpot basically had a decision. They could spend millions of dollars on Google and Facebook and LinkedIn ads to get cold traffic to convert into being a HubSpot customer, knowing that no one really just wakes up and decides to spend $50,000 a year on enterprise software. So it's a very convoluted funnel of lead magnets, and then sending a little bit of value, and then trying to get them to a live event. And then eventually, when you are ready to make that decision, HubSpot's top of mind for a CRM. Or by acquiring the Hustle, they just, instead of showing ads, now every ad is basically an ad for HubSpot. Because they have this audience of 2 to 3 million readers who are their ICP, they know that these are people who are either founders or startup employees, who are decision makers, who would eventually decide that they need to buy a CRM. They trust the Hustle as this media resource. They view the Hustle as a value add to their life because they read it 5-6 days a week. And they see subliminally or very obviously HubSpot littered throughout every issue of the Hustle every single day. HubSpot is very top of mind for them. And that's just such a long-term thinking, sophisticated way to think about customer acquisition, where if you're a company like HubSpot, that has this like ACV of $50,000 plus, like you can't just do Facebook ads and Google search. Like you have to actually think more long term. And I do think this like content and media strategy that they woke up to very early and have been acquiring a ton of media assets since, a lot of these other companies from Plaid and others are kind of adopting that same strategy.
But how are you building this like within beehiiv? So I know you have your own kind of like media platform called Creator Spotlight, which I think is awesome. You write your own newsletter, which we talked about, Big Desk Energy, but then you partner with influencers and creators too. Like how do you think about building this like media plus brand strategy like within beehiiv?
I think trust is a big part of it. Every time I send my newsletter every Tuesday, I send it to about 130,000 people a week, and probably get a dozen responses of like, hey, I'm a huge beehiiv fan and customer, like love your take on this. There's a lot of, hey, like I could never imagine going to another platform. Like I feel like I know the CEO, and I respond to every email that I get as well. So like we do have this weird like parasocial relationship. Either you're already a user and I feel very accessible to them. And because I'm talking about what we're building, what we're prioritizing, what we're launching, what I value as a human, they feel some sort of relationship and connected to the company that they're choosing to build their business on, which I think is really important to have that level of trust. Like one of our biggest enterprise deals ever is Time. They got into our funnel because their CTO somehow signed up for Big Desk Energy, read for like 4 months. And then because he saw what we were building and our revenue milestones and my philosophies around hiring and everything else that I share in my newsletter, he, as CTO, raised it to his team, got into our pipeline, and like a few months later closed one of our biggest enterprise deals. So like that is like the HubSpot and Hustle strategy. We aren't the same ACV as a HubSpot in that deal, yes, but that's how I think about it from like my personal lens. Creator Spotlight's doing that at just like a different scale. Creator Spotlight is now one of like the leading creator media businesses. We have 450,000 readers. It's people who are interested in broadly the creator economy, everything from strategies to grow and all the different forms of media and creator businesses that exist. And what we're trying to do there is establish a level of trust and expertise that Francis and Natalia are unbiased, which to an extent they are. Like, would we let them write about people and competitors? Like, that's fine. Obviously, their paycheck comes from us, but we try to be as unbiased as possible.
Well, you even put ads in their newsletter. Like it's not just like a beehiiv front and center.
We don't want it to be. There was a time when Creator Spotlight was a pet project of an employee, one of our early employees, who I thought it was a great idea just to highlight users who were having success on the platform as a way to educate all of the other users of like, this is what good looks like. You should be using Boost. You should be using the recommendation network. You should be using these different things. It's user education, which is good for activation and retention, but it also gives us the ability to put a user on a pedestal and a spotlight to be able to showcase their story. So that was like the origin of it. And then we would only choose our users. And then when we hired Francis to be the editor, we're like, how do we actually build this into like a kind of like a standalone media company where it has its own ads unit? We do want it to be monetizable. We do want it to be cash flow positive, and we do want it to be perceived as totally independent. So when they do recommend beehiiv, it feels legit and authentic because it doesn't feel like it's like company, state-led media essentially. And that's allowed them to cover a lot of creators on other competing platforms that we're totally okay with them doing.
That's something that me and Kyle talk about all the time, that if a brand goes to create their own sub media company within it, like that shit has to be not only good, but probably better than other stuff, because people already come into it with a little bit of like, I don't know what's going on over here. Is this thing real? It has to be a product that is great in and of itself.
And like, it definitely didn't start that way, right? It started as a pet project that like was not very good. It looked pretty terrible. And we were just kind of like pumping our own tires, right? Like it was state-led media, but then we decided to like actually build like a standalone media company. And now we have obviously all these different funnels built up where I think like 30 days after subscribing, if you subscribed from outside of the beehiiv ecosystem, you get upsold to beehiiv with like a 25% discount. And it comes as like an authentic recommendation. By that point, you probably do know that it is part of like the beehiiv umbrella. But ideally, from the content and the value that you've extracted from it, it doesn't feel like it's just put on for that purpose, and it converts pretty well.
And Tyler, looking ahead, so if you look to this path to 50 million ARR plus, what are say the top three biggest growth bets you're making to get there?
One, I think, is like the continued consolidation. So podcasting, we're 2 weeks into it, and I told you how we've kind of like shattered our expectations for Q2. I do see a world where podcast can be like a huge standalone business unit for us. And like everything from like the last election, how they dub it like the podcast election, and all of the money and brand dollars that are pouring into the medium, I do think that's going to continue to accelerate. And so podcasting, and I'm not going to tip off what we're building next, but it will come in July. That's like our next like tentpole feature as part of this consolidation play. So I think like to continue moving down the line of how do we build a more holistic content platform, I think that's going to unlock a lot of revenue. So that's one. Two would be the enterprise. So like, again, we only have 5 people in this enterprise sales team. It's gone from 0 to 30% of our revenue. I expect it to go up to 50 to 60% probably in the next like 18 months. I think it'll eventually be the majority of our revenue. I keep off all of the different brands and logos that we have in our pipeline right now, but they're kind of like the biggest of the big media companies and businesses that are riding 2 waves. One are like the traditional media companies that you would expect, like a Time and a Newsweek. Like those are our existing customers that CJ already alluded to. The next is when you think of HubSpot and Plaid, like I do think that trend that we were just talking about non-media companies adopting content as a strategy, that's an entirely new wave that we never even like baked into any of our projections. That's kind of playing out in real time now. And I do think that we are actually best positioned because we're the most tech forward and kind of can speak their language, where we're not just a pure media platform, but we're a pure tech platform. And I think can serve those tech companies really well. I think that is a trend that is going to continue to accelerate, especially with AI. And I think we're best positioned to lead that. And then the third thing would probably be the ad network. Truly think we're like the earliest stages of the ad network. I know where all the bodies are buried and like what works well and what does not work well with the ad network. Like I said, we just recently doubled the size of our ML team. We just brought on like a new seller. There's a pretty direct correlation with the number of active campaigns we have in the ad network with obviously the revenue that it generates and the happiness of our users, the retention of our users, and the decrease of churn. And I think as we continue to refine and improve the models on the ad network, it should be the rising tide lifts all boats, and it really accelerates our SaaS business as well. I'll give you a fourth real quick. I do think the MCP and actually transitioning from a platform like every other tech company that just adds like an AI feature here and an AI feature there just for like the marketing benefit. I think that's where we were like 2 years ago, like early AI. I do genuinely think how CJ is using the MCP is kind of the future of how a lot of content creators will interact with most different platforms. I do think we're at the cutting edge of moving from web platform that you log in with a username and password and click on a bunch of dashboards and create your content and do stuff to can we be this like agentic infrastructure layer that plugs in with Claude and plugs in with all of the other tools that you're already using. And I think that unlocks so many new use cases and really moving from platform to infrastructure.
Next up, we've got our segment, Something I Tried This Week. Take it away.
So the thing I tried this week is building my own Claude skill. My best newsletter pieces are just going to become a skill in Claude, which like I'm both excited about and nervous about at the same time. Excited about it because it actually means that people can take something they've read and then do something with it immediately in their day-to-day. As an example, I was going to do some competitive research, and I have a great newsletter piece with Torsten Walbaum about how to do deep research with ChatGPT at the time. But it basically just walks through like all the guardrails, all the instructions to give ChatGPT, all the kind of do's and don'ts. And I just gave that to Claude and say, turn this into a research skill. So anytime I want to do any deep go-to-market research in these kinds of areas, like this is what you pull from. And it's just incredibly useful. And now I want to do that with like a dozen other newsletter pieces.
I gave mine up at the beginning of the podcast, the MCP. Tyler, is there anything that you've tried over the last week or two?
Networking is one. The other thing I'd say is actually not too dissimilar from Kyle. I've like used Claude as like a side like sparring partner when writing my newsletter where like I'll get stuck on a sentence. I'm like, can you just give me like 5 iterations of the sentence to make it better? And it spits out one that's like, okay, and I'll just roll with that. But now I trained it and created a skill as well, where it's like read every newsletter I've ever written, create like a style guide of exactly how you would describe how I write, what my humor is, what I do, what I don't do, how I format my sentences. And I'm going to give you my rough draft. And I want you to write like me and help me formulate like this final draft. It wasn't perfect, but it's gotten me to like a final draft much faster, which was helpful. And then I also used the MCP and was like, analyze every subject line I've ever written and like do like a true analysis of what works and what doesn't. And I didn't think it was going to be that insightful, but there was like actually like a very concrete pattern of like when you use locations, it's 5% higher on average than when you use this. Anytime that you use the word beehiiv in a subject line, it actually decreases open rate by like 5%. And like there was all of these really like interesting patterns and rules that it was unable to uncover quantifiably. And so then I created a skill in that. And so I'm like, I'm going to send you my final draft of my newsletter and you spit out 5 of the best subject lines you think I should use. And I just A/B test them.
Mostly Growth is a Mostly Media production. Executive produced by Ben Hillman. That's me. Additional production by Steve Sarasoli. Nothing said on this podcast is intended to be business or investment advice. It's the sole opinion of CJ, Kyle, and Ben. Just some guys who love talking growth. Mostly. If you like this podcast, hit subscribe and give it 5 stars. It only takes like 2 seconds and our algorithm overlords love it. Drink water, call your mom, and have a great day.